Let's explore the global handover from last night. US markets were characterized by flatness, both on the futures and in the real market. Futures were barely up overnight. The only index which did well yesterday really in the US was the Nasdaq, which saw its biggest gain since April. It was up more than 2%, around 2.5%, and that was on the back of a sharp surge that we saw in Amazon shares with nearly an 8% jump, posting their best day since December 2018. And then you had IBM on the back of a very strong, unexpected show in Q2, jumping up a massive 5%. These moves also brought the S&P index into the green for 2020, leaving the Dow as the only index now which is 6.5% negative for this year. So that's how the US market panned out. Needless to say, the Oxford vaccine stage 2 trial is something that's keeping global equity markets fairly upbeat in the last 24 to 48 hours. And you're going to see that trickle into Asia and Europe as well. Asian markets were particularly upbeat on the vaccine news. The Nikkei was up 0.63%. The Topix was up 0.2%. The Kospi was up nearly 1%. And the Australian benchmark ASX 200 also added 0.8%. So Asia definitely on the tear on the back of the vaccine news. Europe also very positive. The Stoxx 600 closed up 0.7%. Over here, your construction and material firms really outperformed with the 1.5% rise. And most of your sectors and major bourses ended the day in positive territory. So 3 continents, regions, Asia Pacific, USA and Europe, all the equity markets been very active over the last 24 hours. Now, on the commodity side, which is also important to look at as we do every day, oil prices continue to taper off. So what's happened is there's positive news on the vaccine front, but cases are also climbing. In India, here we're at 40,000 cases a day, the highest we've been since the beginning of the virus. The US is also in key states like Arizona, Texas, Florida, seeing a huge surge in cases. So demand for oil is going to be hit. Air traffic just fell for the first month since April in June for the US airlines. So that shows you that oil demand is going to take a bit of a hit. And let's remember the OPEC just met a week ago, and decided that production cuts were necessary, but now they'll be easing those off and gradually ramping up production. So on the back of this, crude kind of hung around at $43.29 per barrel, and WTI rose 22 cents to be around $40 per barrel. So keep in mind these prices could face some pressure in the coming weeks. Looking at gold, new fresh highest since September 2011. Spot gold at $1,815 per ounce, and having hit a high of $1,820 earlier in the session, and gold futures at $1,818 per ounce. So gold is just unstoppable. There's a lot of volatility in equity markets. There's a lot of froth. Some people are calling it the tech bubble. Mark Cuban came out and said American investors are getting greedy. So while all this panic and volatility grips asset prices and equity markets, gold seems to be a safe haven, and people are willing to pay more and more for this. On the back of that, silver saw its largest 4-year spike yesterday as well. Silver needs to play catch up to gold now.